Hey everybody, Dave Bartosiak here with another Dave's Daily Dive into the charts. It's a lot of D's. Today, a couple of things. First and foremost, let's look at these bonds. So this is the 10-year, and basically this is actual values on the 10-year, right? So this is not the yield. But as these numbers go up, the yield goes down. As the numbers go down, yields go up. You can see what happened here today. I'm on the in the intraday chart here. These are 5-minute bars that you had a huge move from about 8:15 Chicago time. Huge move in interest rates today as that 10-year sold off considerably. So that was a big time move there. And if you, in the grand scheme of things, if we go out here and we take a look at the daily chart, you can see what the trend has been recently, and a lot of choppiness happening in the 10-year here over the course of the last several months, really going back to the start of the year. Lots of chop back and forth as we really struggle to find direction. So again, today, major downside move there for the 10-year, which means yields spiked. Now, what could cause that? Well, maybe a little something to do with the market having a nice, healthy rally here. Coming off the lows in the morning, pretty much straight up for most of the day, and then just kind of sold off, recently towards after the close and into the end of the trading day. So really surprising how much this market has been bid. If you look here, this is 23.33 all the way up to 23.60 and change. So that's almost a 30 handle rally there in the S&P, which is pretty significant. If I go out to the daily chart, now you can see this a little bit more, that we had the sell-off sort of into last week as doubts of the tax plan, not the tax plan, but the healthcare plan, and then came down to touch this 50-day moving average intraday yesterday, rallied off the lows, and had a fierce rally today. So we're talking, almost 40 handles on the S&P 500 just in the course of the last couple of days. So that's a pretty fierce move. And I know I've touched on gold a lot, guys, so I want to touch on it again today here. As we saw interest rates spike, gold got hit. There's a real big move here just around the VWAP, about $1 ahead of it, and then it sold off all the way down to 1247.30 before a little bit of a relief rally into the end of the day. A lot of this had to do with interest rates, but also I think you had some dollar strength overall, as here is the British pound, news of another Scottish referendum now, and the pound sold off as a direct result of that. Pretty much all day, could not find a bid in the pound, so I think that led overall to some dollar strength. Okay, so that's basically the sort of broad market overview, what happened throughout the course of trade today. Now let's look at a couple of stocks, 5 stocks actually, that are Zacks Rank #1 strong buy stocks that are breaking out from their 52-week highs. Applied Optoelectronics. This is a stock I had in home run. I think I had it at like 15 and I got shaken out. This is last year, and it has been on a tear recently. Huge uptick in volume too, so that's a good thing. So if you're long in this stock, that should be confirming your suspicions that you should stay in. Look at how this commodity channel index overbought rather, comes down to the zero line, and you can just buy it every time. And now we have a little bit of a dip below, but another bullish crossover, and obviously this thing is off to the races. Almost a $60 stock when you could have got it for $12 in August of 2016. That's Applied Optoelectronics, ticker AAOI. Now I'm going to look at ticker ACLS. That's Axcelis Tech. And another, not exactly the exponential story like we had with Applied Optoelectronics, but not bad at all either. It's been chopping higher. Here you had a lot of selling pressure, and you'll get this. It'll be like an earnings report. Market doesn't like it, and then it immediately kind of eats back a lot of that. Now the choppiness recently, kind of highs just under 17, sold off considerably. This should have come as no surprise again that commodity channel index being oversold, crossing over the zero line, giving you that buy signal. That's where we are today. I'd be looking for I would buy on strength as long as the volume is there on the breakout here. That ticker is ACLS. Now let's look at Cognex Corp. That's CGNX. So again, Zacks Rank, #1 strong buy. This is sort of that slow and steady wins the race kind of pace here. This happens a lot when you have these stocks that are in fact Zacks Rank #1 strong buys, because what that means is that earnings estimates have ticked up and pushed higher, and throughout this move here you could bet that that was happening, and that's why you see the stock rally along with it. From a technical perspective, I mean, you could wait for a pullback to the 50-day moving average, but it's been so long since that happened. This is something you just kind of grab on and close your eyes and hope you got in at the right time. But seriously, here, the 77.50 level, I think I'd be waiting for a pullback to that maybe. Even more healthier would be the bottom end of this gap, or the top end of this gap rather, at 43 and change, which also happens to be the 50-day moving average. But it could just run away from you, and that's ticker CGNX. Now we've got Ultratech, ticker UTEK. And this is another story where you have a huge big gap up on earnings and then it just runs away. But important to note is look at the increase in volume. So that shows you that this stock has popped up on the radar when it was pretty much insignificant before this huge gap up. Interesting enough also that it's got this huge sort of chop down, huge chop up, and is stuck at this resistance level. Then when you get the big gap up, all of a sudden now you're on the radar and you get the huge uptick in volume. So that's interesting. And this is another one that just kind of keeps on trucking to the upside. Maybe you don't have a chance for the pullback on that just yet. And one that's full of puns here, easy to get revved up on, Ferrari, ticker RACE. Clever ticker too. I went on a little Ferrari rant yesterday in my write-up for Momentum Trader. Essentially what Ferrari's doing is they're trying to meet demand for their cars, and with models that are not exactly the most Ferrari of models. I went on a little bit of a rant on the California yesterday. Nothing like upsetting owners of $200,000 cars, but essentially it's an overpriced Maserati, but let's not even go there today. What we are going to go to is just that the stock just keeps on breaking higher, gapping higher, and there's been an increase in the amount of volume here. There's been a lot of upgrades. I think Ferrari could be a $100 stock in the short term for sure. So again, guys, check me out, Twitter at Bartosiastics, and come back for Dave's daily dive into the charts, where I'll have 4 or 5 more tickers for you tomorrow. So signing out here on March 28th. Thanks, everybody, for hanging out, and we will see you all tomorrow.